Well, folks, the market just got a whole lot more interesting. A lot to get into in this video. We got to talk about a lot of stocks, a lot of things going on in the market. I got some things to show you today that are, let's call it, very interesting in regards to kind of where this market's headed and things like that. Hope you guys enjoy this as always. Thanks so much for joining me. Let's jump straight into it, okay? So, I want to start out here with the NASDAQ. So, the NASDAQ and the markets in general got absolutely wrecked. From basically mid-August through the end of September. And Wall Street sold stocks left and right. Like, why? How do you get the NASDAQ to go down like that? Wall Street's dumping stocks like it's nobody's business. And they a little outdid themselves. Let's just call it that. They sent the market down almost 20% in a 6-week span. Almost 20%, an absolutely insane move. That's one of the most insane moves I've ever seen in the stock market. I've been in this game for 14 years now. I don't know, I remember in the Rona crash, we fell 20+% in a matter of a few weeks. But, that's always something you almost never see. To be down about 20% in a matter of literally 6 weeks. That's insane. But that's what they did. They put crazy selling pressure on the market and they tanked everything, okay? And here we are 2 days into October and the NASDAQ's already climbed 5.5%. In 2 days. Now, yesterday, Wall Street, a lot of folks were kind of like, well, what is this? Because yesterday was a massive rally day. People were like, it might just be a one-day rally thing. It's probably going to get sold off tomorrow. Then today happens, and it's a way more intense rally. And it was like, wait, what's going on here? Is this real? Like now people are looking at this and they're like, well, maybe it's just a 2-day rally. Maybe this is not real either, right? And so everybody's still trying to process this on wait, are we going to go risk on now or are we still risk off? Like what's going on? So everybody's kind of in this awkward time now on Wall Street trying to figure out, maybe I shouldn't have sold as heavy. Maybe I should be buying now. Everybody's trying to figure that out right now, right? And then obviously, I think it's extremely risky to be a short right now in the month of October. If I was a short, I would have used last week to cover everything in sight. And this week as well, just because it's, you've had a great year as a short. You have very few years as a short seller to ever make really good money. This is one of those years. You can't risk losing a bunch of your gains or all your gains by staying short into the next few months. You just can't do it. So I think this is ultimately what I believe. This is what I think is happening. I believe that shorts are actually covering, and that's what's likely moving up the market right now. And I believe a lot of the folks on Wall Street that have money sitting on the sideline that have put that intense selling pressure on the last 6 weeks, I think they're looking at this and they're like, is this just a short cover rally because shorts don't want to be going into this next few months short, right? Because obviously we know midterms, usually is very great for the market for November, December. We also got earnings season coming, right? So I think a lot of that Wall Street money is kind of looking at this and like, man, are we making a mistake here or do we need to go long? And that's what they're trying to process for information right now. But I believe this move is actually due to short sellers covering, realizing, oh boy, the risk reward's not there the way it once was. We'll reassess in December, okay? The Dow Jones Industrial has gone up 1,500 points in 2 days. In 2 days here at the start of October. That's an incredible move. The Russell's going to destroy all other indexes if we go, as soon as we go risk on in the market and we get, a month, 2 months, 3 months, 4 months of, sustained rallies, the Russell's going to wreck everything else, okay? And basically it's already destroying the other indexes. Look at this one. It's up 6.6% just in the past 2 days. The Russell's been held back for 5 years. For 5 years, the Russell's been held back. We'll see if that stays another 5 years or, I think it has a little catching up to do. Let's just put it that way, okay? Now, I opened up my stocks list today and it was like, oh my word, okay? Do we hit the jackpot on a day like today? My gosh, look at the moves. I mean, 13.5% Shopify, BYND made a massive move, Win made a massive move. Fubo, 9%, the greatest stock in the history of mankind right there. Nordstrom made a 7% plus move. The Planet, 7% plus. Corsair, 7% plus. The interesting thing about a stock like the Planet moving like that, and I was thinking about this because I'm like, that's not really a shorted type stock. I think that particular move, and we're going to come back to the Planet a little later in this video on something I saw that's going on there essentially, okay? But it almost feels like some long money moving in that one, realizing, oh, we might go risk on again. Planet could, double up, triple up in that sort of environment. Corsair made a massive move. Look at Revolve. Look at PayPal today, 6.5%. Oatly, 6% plus. STC, 6%. Look at Tapestry. Look at Honest today. That one bottomed way back in June, and it's been performing very well over the last few months. Skyworks, JP Morgan, The Chef, Amazon, everything across the board. Just some great movers, okay? But Shopify, I wanted to point out this one, because look at the performance over the past 2 days. Almost 19%, right? So basically it's about 3x'd, if not a little more than 3x'd, the market in general, right? And that's what you're gonna see as soon as we go risk on. And so you gotta keep in mind with some of these stocks like a Shopify that were the stocks that were completely thrown out of the market, right? And that stock was down, just a few trading days ago, was down over 80% year to date, right? When it comes to going risk on in the market again, a stock like Shopify is going to 3x the market. And so you got to keep this in mind that when you go risk on again, whatever got killed the most is going to come back the most. As long as it's a good company, like obviously a Shopify is, right? If it's some crap company, it won't do that. That's just bottom line. If they don't have the margins and they don't have the revenue growth and getting to that profitability state and also have a good story behind them. If they don't have that, there's no hope, okay? But as long as these companies have that behind them, they're going to destroy the market. And just like, if the market had sold off 6%, Shopify was down 18%. It works the other way. It's not like it only goes down and doesn't go up, the same amount. And so this is just something to kind of keep in mind, in regards to your positioning and where you kind of think the market is in general, okay? Fubo is setting up absolutely amazing, okay? Here's why this one is setting up so amazing. So Fubo has climbed 16% plus over the last few trading days, right? But the best part of this is, I'll take a moment to show you Tendies. With the pinned comment down there, it'll also be the first link in the description. You can get free access to everything I'm showing you here, which tracks unusual options activity in the market. This is fascinating. Look at this here today from Tendies. Somebody loaded up on $650 puts for Netflix stock. $24 million move there, okay? $409 price they paid here. It's fascinating to be able to see moves in stocks that you own or you're looking into in the market, or you're just curious in general. Look at Tesla. Tesla is very active here today. This is a fascinating move. Somebody loaded up $800,000 plus move here, 250 calls, $34. Somebody's very bullish that Tesla's going to go up a lot by January 20th of 2023.
Tendies is a social trading app that's giving away hundreds of dollars worth of tools for free, saving you hundreds per month if you look at what other services charge for the same stuff. I personally love the options flow, which is unbelievably helpful at predicting price movements in the options market. I also want to show you Brokerage Connect, where you can integrate your portfolio so you can monitor your performance and do the necessary research to be profitable in this environment. All the due diligence in one place, and you have access to constantly refreshing feed of information relevant to you in your portfolio. So make sure you click the pinned comment down there to get free access to all of this I showed you in this video here today. That will be pinned comment.
We haven't even gotten to earnings yet, okay? And I can't wait to get to earnings, because based upon Google Trends, I believe Fubo is acquiring way more customers than anybody on Wall Street expected, than even the company expected based upon Google Trends. And we'll see if this is factual, obviously very soon when they report their earnings, right? But I'm looking at this and I'm like, I think they're going to report some ridiculous growth numbers in revenue growth, in customer acquisition, and I think this is going to set up for a phenomenal last quarter of 2022 and just an amazing kind of 2023. And I think the losses that a lot of folks expected Fubo to take in 23, I think it's going to be way better. I think they're going to take way less losses, because the company's basically focus much on expenses over the last few quarters, because they realize, oh crap, the market's not valuing us off growth now. They want to see us get to more, closer to profitability. So they've really watched expenses, and they're going to keep watching that, right? And they're really put an eye on profitability and trying to get cash flow to a better place, trying to get profitability to a better place. Now, they won't be profitable in 23, but if they get a lot closer to profitability than Wall Street's expecting and then investors are expecting, next thing you know, that's a $10, $15, $20 stock in like a snap of fingers, okay? And so I can't wait. The setup for Fubo is like Oh man, it's ideal. Let's just put it that way. It's ideal in going into this next few quarters. Oh gosh. And then in November, keep in mind, World Cup's coming. Oh, World Cup's coming. And Fubo does a great job retaining customers after, football season's over as well. So I just can't wait, man. I just can't wait to get to those. This is a company I'm looking most forward to seeing their earnings over the next few quarters. This company where you see right in front of you, the setup is beautiful there, okay? Now, if you look at the safety stocks, these ones had been holding up well, right? Not anymore. And, they're holding up, but they're not performing the way they were performing, right? Because now people are looking at it and they're trying to figure out, okay, do I want to keep hiding my money in General Mills for the rest of, my life? And Coca-Cola and Dollar Tree and Campbell's Soup, right? And those are places that people certainly hide money in when the market's bad, right? But if there's even a thought process that the Fed is going to potentially raise maybe 2 more times and then they're done, or 1 more time and they're done, right? Then all of a sudden people start reassessing everything. And they start saying, okay, do I really want to hide out in Kraft Heinz for the next year? I don't know about that if the Fed's really going to stop raising rates, right? And most of Wall Street's not on that realm of thinking yet. But if they get closer to that realm of thinking, right, and as more and more switch to that side, that's where you see people just being like, no, I don't want to hold Coca-Cola stock anymore. I want to get to some of that growth money, right? And some of those stocks have held up very, very well, and that's just the way it is in a crashing market, right? Now, the banking names are definitely telling you how much Wall Street's all of a sudden maybe offside in this situation, because look at the moves in Wall Street today. Deutsche Bank up 8% plus. I just love saying Deutsche Bank, okay? It's one of my favorite company names in the history of companies. Ally Bank up 5% plus, SoFi up 5% plus, Goldman Sachs up 5% plus, Wells Fargo, JP Morgan, Bank of America, all 4% plus movers there. That's Wall Street essentially signaling like, hey, we might be a little too bearish, right? Because everybody's gone. You go back to last week, you couldn't find a bull anywhere in sight. And everybody got so convinced that there's no soft landing from the Fed. Everybody was either talking about hard landing or crash landing, right? And that was the commentary last week. And I think the reason commentary gets so unbelievably bearish negative like that is because the market is trending that way. And when you have the NASDAQ go down almost 20%, in 6 flip and flapjack in weeks, that puts everybody into such a negative mindset and such a scarcity mentality on Wall Street, and they just start seeing everything as end of the world because the market's performing so bad, right? And they say, and you couldn't sell these people a stock last week. It didn't matter if it was Apple or it was Crapple. It didn't matter what it was. They wouldn't buy a thing last week. I don't care what it is. I don't care what the price is. I don't care what the forward P is. I don't care what the story is. I don't care what the long-term growth is. I don't care what the balance sheet is, the income statement, the cash flow. It all doesn't matter. I don't want a piece of anything. And that's what they were saying last week, right? That can flip. Dude, that can flip in like 2 weeks. Literally. I've seen it happen before where all of a sudden people are like, oh, you know what? 2 weeks ago, I think I was too bearish on this whole situation. I covered a video last night on my new channel, the Reaction channel, right? Jeremy Lefebvre Makes Money. And that was covering a major bear that has now gone bullish on the market, right? In a pretty short amount of time. That's how fast it happens. And a lot of it can be dependent upon the way the market's trending. And it basically kind of breeds sentiment out there, right? Everybody was feeling great back in November 2021. Everybody was feeling amazing. Were they feeling amazing because they really believed in everything, or was it because the market hit its last all-time high in November, right? This is something to think about. I think the market, the way it's moving, it moves people's sentiment around, okay? Now, housing stocks all had a great day today. They all moved up huge, rocketed up the most of all of them, 9% plus. But look at Century Communities, Zillow, all these stocks. I think they might be jumping the gun a little bit here in regards to this. And here's what's going on, okay? So mortgage rates last week were over 7%. But since then, they've come down. It's good news. But the 30-year fixed on average is still 6.65. So this essentially means that people still aren't going to be super like, oh, I got to go buy a new house right now, 6.6%. No. But I think they're trying to jump the gun a little bit because they're like, maybe this is a trend that continues. The next thing we're in the 5s. I think in order for folks to really consider getting back out there in the housing market anytime soon, I think they've got to see rates around 5% or below 5%. 2 to 3, I think people understand they're not going to get that now at this point in time. Okay, like we were getting obviously the last couple of years. Those might be gone for a little bit here. Okay, so I think if they're talking about the housing market getting back on its 2 feet, I think we've got to see the 30-year go to about 5% on a 30-year mortgage or under 5%. Because I think if somebody gets a 4.7 or something like that, I think they can do with that. Right? They can deal with that and they can afford that. But when we start talking about these high 6s, 7%, it just knocks so many buyers out of the market. And a lot of people are just like, dude, I'm not saying that in decades. I ain't going there. I'm not stupid, okay? And so I just think they're jumping the gun a little bit here. But at the same time, if the trend keeps going on, obviously that would be great for all the home builders and things like that. But we got a long way to go, man. There's a long way to go to get kind of where the market needs to get things there. Now, the one bad thing in regards to a day like today, right, where everything's going good, is commodities. Look at the commodity index today. Look at WTI was up 3% today. Natural gas was up 5% today. We need to see these numbers continue to come down or just be moderate. And the reason, obviously, that's important is if we're talking about cooling inflation, which the more we cool inflation, the more the Fed doesn't have to raise rates. We need to see commodities be chilling. So that's the one kind of disappointing thing here. The good news is most of these commodities have already crashed over the last, let's call it 3 to 6 months, depending upon what commodity it is. Travel stocks, you want to see some of the biggest movers in the world? Look at these stocks, okay? Royal Caribbean, 16.6% today. That's one day. What is this, a call option? Holy smokers, that ain't no dang jokers. Look at CCL, 13.2% today. I mean, the moves are massive. I mean, literally owning travel stocks is like owning a call option. Literally, that's what it feels like when you see the moves these stocks like. Look at Win today, 9.5%. Jeez. This company controls probably $20 billion worth of properties, and the stock price moves 9.5% in a day. Geez, it treats it like it's a penny stock, right? But that's the sort of market we're in right now, right? And I mean, yeah, if you were to tell me the market's going to be risk on the next few months, those travel stocks are going to perform absolutely phenomenal outside of a situation where oil also went super high. Now, when it comes to oil, I'm not so convinced that oil will be able to go up in a substantial way over the next few months. All things are possible, but do keep in mind, traditionally, oil is not some high flyer in the fall time and going into winter time. That's not usually how it works. Now, OPEC cut back production recently. That obviously helped out oil and obviously helped out all the oil and gas stocks, but it's not usually a high flying time going into winter time in regards to oil price. So we'll see how all of that shakes out, but that's kind of the one risk for those travel stocks. But yeah, if you're going to go risk on the next few months, there's going to be some big moves in there, right? Great day in the public account today. Almost $50,000 up in that particular account. But, the way I view this is there's a long way to climb back. There's a long way to climb back. This is an account that at peak was over $2 million, right? So I'm not even going to begin to get excited until we're back over $2 million. Now, the thing to keep in mind there is, one, I always keep in mind patience, right? And not expecting this to happen anytime soon. With that being said, I am very of the understanding that there's a lot of stocks I hold in there that if we go back risk on in the market, those stocks will go up 50%, 75%, if not double up in a matter of months. Not years, in months. And so, for that account to get, if you were telling me NASDAQ goes up 15% over the next 3 months, right? We have a huge year-to-end rally. That account's back over $2 million. Like that. But the question is, do you get that sort of rally? And in order to get that sort of rally, earnings have to come in decent or good. CPI has got to continue to come down. Inflation metrics in general have to continue to come down. If that happens, you can certainly get that risk on. And a lot of people are very underweight. All of a sudden, you get the fund managers all having to chase the indexes around. It's not a realm of possibility. I am not like, this is going to happen. I'm not feeling like that, right? Like, because I don't want to get my hopes up and then it doesn't happen, right? But I'm very of the understanding that definitely is a possibility. And so that's kind of what I'm thinking here. Now, in regards to kind of, my plans and all that, I'll get into that in just a moment. Now, in regards to these stocks circled here, right? because these are always my most divisive stocks that I personally hold, right? No one's getting in their feelings about PayPal or Evolve or Win or even Shopify for that matter, or Skyworks Solutions or Amazon or a lot of my other stocks, right? Google McDougal, even Meta, like people don't really get in their feelings about those. These stocks are my very divisive stocks, okay? And I can tell you every single one of those has incredible stuff going for them over the next year, okay? Starting out at the top, Fubo's, like I said, we'll see in the numbers. I think they're acquiring way more customers than the company expected and than Wall Street expected. We'll see that. The Planet, I went by the Planet on Sunday afternoon and just chilled in the parking lot for a little bit. Planet was busy. Vegas location on a Sunday afternoon, busy. I was like, okay, October and it's this busy. All right, I like that. Okay. Corsair, they've been destroyed by things like container rates that wrecked their margins, obviously, with, on top of that, a massive down year in 2022 as well. I think they're setting up to have a ridiculous 2023. I think their Christmas quarter is actually going to be really good. And I think honestly, the 2023 numbers are going to be exceptional. Margins are going to improve in a massive way. Revenue is going to improve in a massive way. Cash flow and profitability. And they're already a profitable company, by the way. But I just think it's going to take to in the next level in 2023. It's coming off like worst case scenario year, and it's going to go into a very good year. I think gaming is going to be strong next year. Oatly ain't no jokely. Oatly, this is a company that doesn't just have long-term trends going for it, but also the price of oats have tanked. And I mean, absolutely tanked over the last several months. I think you're going to see massive margin improvement for the company in 2023 and much closer to profitability than I think a lot of folks expect. Honest, margins are going to go very nice, let's call it, in 2023, and cash flow profitability as well for many various reasons. And the Chef, same exact thing. The Chef's been the most killed out of all the stocks. It's been the most killed. And the reason is container freight costs, they went basically 5x, 10x, and that destroyed their margins. Then on top of that, they had trucking rates went insane. That destroyed their margins even more, right? Plus, they were just getting into retailers, so they couldn't go up in price right away. That destroyed their margins. They were literally as bad as it could have possibly went for this company in 2022 is what happened essentially. All those things are reversing now. Container costs have come down massively. Trucking rates have come down massively, and they're going up in price now for all the retailers. So yeah, I mean, I think the Chef's going to be in a very good spot in 2023 compared to 2022. Okay, so that's just something to keep in mind there, right? Now, the market is still kind of in no man's land for the next week and a half. And so this is something to kind of keep in mind here. This is called the next week. Still in no man's land. So, if the market pushes down, don't be surprised as well, right? There's upside, there's downside. We'll see what happens. Once we get to the 13th, that's when things start being driven more by fundamentals and what's going to happen there. And that's when we get CPI, then we get JP Morgan earnings on the 14th, and then we get into massive earnings season. And if we just come in with decent numbers for these companies, market's going to fly in that sort of environment for the month of October, right? Now, if you want to see how offsides Wall Street is, look at this. Look at them loading up on calls today. This is on Tendies, and you can see some of the unusual options activity, right? Look at the QQQ, the NASDAQ calls there. QQQ, 185 calls there, right? Expire in December 2023. Tesla calls. Netflix puts it because I think if I recall, somebody loaded up on, I think it was Netflix calls yesterday, so maybe they're doing an offsides position there. QQQ 290 calls there, interesting. And then 340 calls on QQQ. For March of 2023, I mean, what? What? Okay. So anyways, yeah, it's fun to see some of this activity, and this goes to show you, honestly, how offsides kind of Wall Street is in this situation, okay? Now, my plan for the next 30 days is if the market goes beast mode, this is my personal plan, right? Doesn't mean this is right for everybody else, because other people might be in a very different situation with me. Remember, I've invested insanely heavy in 2022, outside of kind of like July and part of August. I took a break there, but I invested super heavy, and obviously over the last month or so, I put a lot of money in the market. It was like $10,000, $15,000, $25,000. It was like stocks, right? So if the market goes beast mode, I'm going to cash up. If we go bust over the next 30 days, then I'll just continue to buy out there. So either way, I'm happy with whatever way things go, honestly. If they want to crash this market more over the next few weeks, sweet, I'll buy up. If we go beast mode, then that's fine. I'll use that time as cash up. But remember the situation I'm in versus other people. You know, if you're underweight equities, you're at a big risk if obviously we go risk on, right? Because you're underweight, you know, a lot of positions, then you might have to buy it, let's just call it much more substantial, higher numbers in the future. If you are overweight and you're low on cash, well, shoot, if the market kind of has some fun over the next month or two, it's a great opportunity for you to cash up a little bit and get ready in case they try to take things back down at the beginning of 2023, which is always a possibility, right? So that's the way I just look at things. It's like, you know, sometimes we cash up a little more, sometimes we're buying a little heavier. Hope you guys enjoy this. As always, if you want to say hello to me on Instagram, send me a DM if you enjoy the videos and just say hi. I try to get back to folks. And then make sure you check out pinned comment down there and you get access to everything from Tendies. It's absolutely amazing, okay? It's free access with that pinned comment down there. Much love and have a great day.